Hello and welcome to This Week in Bitcoin, brought to you by Relai Private. There's a lot that happened this week as well, but we have a key interest, that I'm deliberately saying key, you'll see later why, with the ECB. And in a tale as old as time, we do now see yet again another report by the ECB, particularly by Jürgen Schaaf and Ulrich Binzeil, who have in the past always been a good indicator for the Bitcoin price. They literally called the absolute bottom after the FTX crash, quoting Bitcoin has failed. Ever since, Bitcoin has soared if you measure it in fiat and in price. And also, their research is often lacking a lot of substance. This time around, they went into the details where they quoted, the consequences of early investors in Bitcoin. They basically explained the Cantillon effect and that Bitcoin is too good to be true. If you got in early, you're not being rewarded and these things. And I'm just here to tell you two guys, this is the same thing as with every asset on a free market. If I was born in the 50s and I had the opportunity to buy a stock in Apple, or let's say 1,000 stocks in Apple, to make the example a bit more extreme, on the day they went public, and I would have held it up until now, I would be rewarded. Because it's not just the guaranteed success of Apple I see in the 70s or 80s and to the company it is today. I had to endure all of the swings. And a company, if it goes public, or an asset like this, if it establishes itself, it has its ups and downs. And if you are courageous enough to actually bear these swings, you should get rewarded. That's how free markets work. And everyone has the opportunity to buy Bitcoin whether they like it or not. Then secondly, this whole argument, they are explaining the Cantillon effect. If you're close to the money source, you get rewarded more than others than when you're further away. Essentially, they're criticizing capitalism. But then on the other hand as well, if you do like capitalism, you can't really control what people invest in and what they want to do with their own money. And ironically, this is what they're trying to say here. And thirdly, there is no closed source in Bitcoin. It actually is a fairer system where miners are distributing the block premium they get on the rewards out of each block they mine. It is being traded in an open market, 24/7, by the way. It's always liquid. Bitcoin doesn't know weekends or any of the holidays. And at the end of the day, it's up to every individual to decide what to do. Sure, someone who got in early in Bitcoin is now being rewarded, but the early investor and the investor who just finds about it today both have the same opportunities. And that's a key difference to how central banking or all of these monetary schemes work, because at the end of the day, there is no one in control in the middle, and who else is being able to invest into the asset doesn't really matter. The only thing that matters is that everyone has equal opportunity to do. Ironically as well, the way they describe it, you would think, well, if Bitcoin is that good, shouldn't I get into it? So it's kind of like a FOMO article at this point. Pretty ironic, but that weren't the only news the ECB put out this week. We also had some news that they actually are lowering 3 key interest rates on average by 25 basis points. And very interesting, all of these interest rates are in the departments of lending out money through refinancing, through actual lending, or through a part that's called deposit facility, where you actually manage the in and outflows of banks or lending institutions. So in a way, the ECB is trying to secure the way money is being distributed and actually trying to help that liquidity gets back into the market more easily. Ironically, they're part of the Cantillon effect here because they are actually distributing that money to the people who have access to the ECB. Everyday citizens and investors can't just go to the ECB and go like, oh yeah, I'm now a lending facility, please give me 100 billion euros. That doesn't work. However, the facilities closer to them and in work with the ECBs do actually have that possibilities. So if you're speaking about from the previous news of Cantillon effect and how unfair it is that people close to the money source have the opportunities, you would think that the ECB would also hold up to their own word. Nevertheless, again, lowering interest rates, showing that they want liquidity in the system. They're trying to fight on how to actually stabilize the euro, which at this point is going pretty much on a downward spiral if you measure it in purchasing power. And ironically, the only option to probably get out of this is to actually hold on to a hard asset. And, we might know one that would be suited for this. And then last but definitely not least, we also had some news for ETF investors. Options are now available on the ETFs. The SEC has approved it, meaning ETFs sort of have their own scaling solutions now. You have like Bitcoin as the backing of the spot ETFs, and then you have options on top of that. And all that they enable is to basically trade volatility. You can put in calls and puts. You can decide on the price going up and down without actually having to go in and out with your shares. That's why you buy these option contracts, and where you say 12 months from now, I believe Bitcoin is at this and this price, execute an order at price 1, 2, and 3. Or you can also do the other thing if it's selling. You can basically do short selling on ETF stocks. And there are also some hedging tactics that a lot of institutions use. This doesn't really mean a lot for the infrastructure we use if you use on-chain and if you hold proper Bitcoin, but it obviously means that volatility could potentially increase, especially for ETF investors. And I'm going to be curious if the spot price of the ETFs is really always staying the same as with the spot price that we see if we buy Bitcoin regularly, because usually if you bring in these, let's call it scaling vehicles in the financial world, you always have some discrepancies between what the actual asset is priced in and what it's actually being traded at. So increased volatility could mean that it also means custodians are actually buying and selling more of the Bitcoin at the end of the day. We'll see about that. But for now, ETF investors can actually also bet on the price going up or down. And that's it for this week in Bitcoin. If you know the drill. If you got questions, feedback, or just want to say hello, leave a comment below. And I look forward to seeing you next week again.